We're going to go over some problems on this lecture. We're going to start with problem E3 on page chapter 4-51. And basically here, they want us to create a shareholders equity section, that one portion of the balance sheet. So we're going to take a look at this information, and as you can see, it provides the information with common stock and bonds payable. Now, it's going to provide you with some information that truly isn't a part of shareholders' equity. And so it's important for you to be able to pick out those items that are significant specifically for shareholders' equity. Now, as we know in going through the chapter, that shareholders' equity consists of capital. So when we're dealing with various stocks and the premiums on are additional in excess of the preferred or common stock, which in this book we call premiums, we would include that along with our retained earnings and other comprehensive income. Now, as you can see, there are some items such as bonds payable that would be in the liability section, and the premiums on bonds payable is a liability. Unearned rent, we're also aware of, is a liability, along with the unfunded accrued pension cost would be a liability. So you want to make sure when you go through these problems that you make sure you only pick up those items that are applicable to the statement we're working on. So we'll start out here with the Graph Corporation. Very important to always make sure that you have your titles. It's an important part of the statements that you are preparing. Shareholders equity section of the balance sheet. And we've got, again, it's important to have the date. Remember that the balance sheet is purely just a snapshot on a certain point in time. So we're going to start out with what we call our contributed capital. If you look at the chapter, they are very clear as to how we need to report these items. And we're going to start with our contributed capital. We're going to look at the preferred stock, the common stock, and then we will add the premiums in excess of par. And so as we can see here, we'll start with our preferred stock, and we'll show it's $100 par. And then from there, we will show that the amount is $65,400. Then we'll take our common stock at $10 par, and this amount is $47,100. So we're going to always separate out our stock with the par value from the additional paid in capital, or as we're going to call it here, preferred premium on, we'll say, preferred stock, and that amount is $39,600. Excuse me, I don't need a, $39,600. And then we will have our premium on common stock, $53,900. And so as you can see here, our total contributed capital, this portion of the shareholders equity section, is going to be $206,000. Then we will bring in our retained earnings, and that is $209,000. Then we've got something called other accumulated other comprehensive income, and this accumulated other comprehensive income is being reported at $8,200. So we have a total here of $200. I totaled my other comprehensive income here of $217, and then we'll show total of RE and OCI, and now we have a total of our shareholders, our stock, and our retained earnings in OCI of 423. Then what we'll do is we will subtract from our shareholders' equity our treasury stock. Now this treasury stock is what we have purchased back into the company, and we're going to show that on our books as a minus in our stockholders' equity section. So our total shareholders' equity is going to be the combination of our stocks minus our shareholders' equity, or I'm going to plus it here since I have it subtracted. And so you'll see here a total of $415,600. Now let's take a look at exercise E6. E6 would like us to prepare the balance sheet. And so as you see here, they have provided us with a lot of information on this balance sheet, and our job is to separate these into the various sections of the balance sheet. As far as the assets go, we're going to want to separate the current assets from long-term investments. Then our property, plant, and equipment is also going to be separated from our intangibles. So if you look here at all the various accounts that have listed, we're just going to focus right now on the asset section. So you can see that the prepaid items, that prepaids will always be a current asset. Land will be part of our property, plant, and equipment. We've got accounts receivable that will always be a current asset. Inventory also will be a current asset. Our patents here are intangibles. Our equipment would be under PP&E. The allowance for doubtful accounts is a contra account to our accounts receivable. So we're going to want to make sure we place that up in the current asset section. Buildings would be part of PP&E. Cash is a current asset. And it looks like we've pretty much picked up all of the current assets. So I'm going to go to a page here, and I'm going to just, again, remember, we want to always create the title to the account. And then from there, we're going to start with our asset section. So our asset section will be labeled initially assets, and then we will separate the various assets we have, starting with the most liquid current. So we will start with our cash. We will go to the accounts receivable, less our allowance for doubtful accounts. Then after that, we're going to put in our inventory and then our prepaid items. These are all of our total current assets. So if I go in here, I'm going to show that the current assets for cash, $4,300. Excuse me, wrong spot there, $4,300. The accounts receivable we have at $12,600 minus our $1,600. just going to move this out of columns so I've got more space here. So our accounts receivable minus our allowance gives us a balance of $11,000 on our accounts receivable. Our inventory is at $7,400. We've got prepaid items here at $1,800 for a total of current assets to be at $24,500. But I'm missing, let's see here, make sure, $24,500. Got it. The next will be our long-term investments. Now these long-term investments are those that are absolutely over a year in order to be collected. The one we've got here is notes receivable, and that one would be $16,400. Now, as I look here, it looks like I missed one. We do have an asset here, sinking fund to retire bonds payable. So we have accumulated a sinking fund in order to clean out our bonds or reduce our bonds. So this currently is sitting on our assets until we use it. And so I'm going to put that in a long-term investment also. Sinking fund to retire bonds payable. And this is going to be a total of $5,000. And here we've got our long-term investments of $20,000, excuse me here, $21,400. Now as we move on to our property, plant, and equipment, our property, plant, and equipment generally begins with our land of $12,200. Then we've got our buildings of $57,400, less our accumulated depreciation. Again, this is a contra account that is used to net our buildings, because this is the amount that we have taken for depreciation purposes throughout the life of this building. And so to come up with a net here, I will show those two figures, 36.4. Then we're going to do the same thing with our equipment. We're going to show the equipment at its cost, 28.7, and then we will also take less our accumulated depreciation on our equipment, which is 9,700, to come up then also with a net value of the equipment costs. Now as we continue on, we will move down to our intangible assets. So I will total the land, the buildings, and the equipment, and this is total property, plant, and equipment, and we've got a total here of $67,600. Make sure I total my long-term investments. I'll just cut and paste that there. So we've got three aspects of our accounts taken care of, and then we'll move on to our intangibles. And we only have one intangible here, patents. They are always recorded net. We don't have an accumulated amortization of our patents of 4,600, so we're going to show that figure right now. And after that, we will have our total assets, and our total assets are going to be a summation of all these of $118,000 $100. We'll move on to the next slide to complete the other section.